Welcome back everyone to the Audacious Money Witch channel, where we talk about investing and trading and a lot of fun things. Druckenmiller buys Barrick Gold stock. Why I just initiated a buy on this gold stock and these stocks. It's been a rough start to the year for the gold miners index. To say the least, investors have avoided the sector like the plague. The index on track for its worst start to the year since 2020. This departure from its prior uptrend is even more disappointing. Given that January and February are typically two of the best months of the year for the Gold Bugs index, going back nearly 30 years. In fact, the negative 18% year-to-date return has underperformed historical averages by 2,200 basis points, a massive divergence versus its normal seasonality. However, sentiment could shift fast as at least one billionaire investor sees value in the industry. According to updated F13 regulatory filings, Stanley Druckenmiller's Duquesne family office, Druckenmiller has placed new investments in the mining sector. The filings show the investment office bought 1.76 million shares of Barrick Gold stock, a gold and copper producer that traded on the New York Stock Exchange with the ticker symbol GOLD. Why I believe in Druckenmiller's $31 million move and bought gold stock, also as well as two other hot stocks very recently in this earnings season. Let's first talk about why I believe in Druckenmiller. He is a legend. Seriously. He is ahead of everyone on the AI train with NVIDIA and Palantir stocks.
NVIDIA bottomed in October in the low 100s. So tired of being a bear and being labeled a bear.
We have not seen that hard landing yet. And do we see it anymore?
Inflation gets stickier the longer it stays in the system, that it increases, not decreases, the probability of a hard landing.
I think he sees this gold stock as a trade. On gold prices will eventually rally to new all-time highs. As the Federal Reserve eventually cuts interest rates and embarks on a new easing cycle, let me give you a warning first before you get too deep in this commodity rabbit hole. This is not a long-term investment for me. It's a trade. Do you know you can buy this gold stock at the same price at 1992? So people that are holding for 31 years with no gain except for dividend is not a good strategy. However, this shows how deep value this stock is today. Obviously, there are some reasons for this underperformance versus seasonality, with stickier than expected inflationary pressures contributing to less margin expansion than hoped in 2023. On top of this, quite a few producers will have transition years in 2024, with major construction projects underway, which will contribute to improved free cash flow profiles in 2025. That said, Barrick Gold Corporation is in a unique position after 3 years of underperformance, with its most recent major growth projects now ramping up and on track to deliver strong performance. This is expected to contribute to higher free cash flow year over year in 2024, with a further step up in free cash flow to $1.3+ billion in 2025 on the back of higher production and margins. In this video, we will dig into Q4 2023 results and whether Barrick has entered a low-risk buy zone after its recent around 26% correction. Barrick Gold released its Q4 and 2023 results, reporting quarterly production of around 0.05 million ounces of gold and around 420 million pounds of copper. This represented around 6% decrease in gold production from the year ago period, which was below plan. But this was largely because of a setback during the ramp-up phase for its Pueblo Viejo expansion. 14 million tons, a growth project that will give the asset a 800,000 plus ounce per annum production profile into the 2040s at industry-leading costs. As for annual production, it was also down over 2% to around 4.05 million ounces, below guidance provided in early 2023. On a positive note, Pueblo Viejo is set to ramp up following reconstruction of the feed conveyor in Q2 of this year, with gold production of over 900,000 ounces per annum in the 2025-2028 period. Moving to the financial results, Barrick reported quarterly revenue of around $3.06 billion, up 10% year over year, and annual revenue of $11.4 billion, up 3% year over year, with marginally lower gold sales offset by a higher realized gold price of $1,948 per ounce. Finally, adjusted earnings per share improved year over year to around 84 cents, but this is just the start of the steady improvements in its financial results, especially if the gold price can continue to hang out near $2,000 per ounce. As this chart highlights, free cash flow improved year over year to around $646 million, but it's still down miles from its previous highs of $3.0 plus billion in 2020. That said, this is not unique to Barrick and is largely because of sticky inflationary pressures sector-wide that have impacted margins, with the downtrend in Barrick's production exacerbating this decline. However, with significant margin improvement post-2024 and a path back around $1,150 per ounce, all-in sustaining costs by 2026, I would expect Barrick to generate at least $2.25 billion in free cash flow in 2024 and 2025 combined, with an already strong balance sheet. $4.15 billion in cash and just around $580 million in net debt. We should see higher dividends in 2025. Finally, it's nice to see the company announcing a new share buyback program for up to $1 billion in repurchases over the next 12 months. And it would be nice to see the company using this opportunistically now that shares are at depressed levels versus 2023. Valuation based on around 1.75 billion shares and a share price of $14.05, Barrick trades at a market cap of around $24.7 billion and an enterprise value around $25.2 billion. This figure pales in comparison to an estimated net asset value of around $37 billion. Its current cash flow multiple is below the average of its past three major bottoms and is especially attractive given that operating cash flow and free cash flow are set to trend higher over the next 3 years. Therefore, the current cash flow multiple is on relatively depressed assumptions and does not factor in any gold or copper price upside. And in these past three instances, Barrick's forward 3-month median returns were around 50% off these important lows, with average returns above 40%, even excluding the March 2020 instance, which led to a parabolic rally in miners. I see a fair value for Barrick of $22.60. This leaves the stock at one of its largest discounts to fair value since its bottom in November of 2022, following its Q3 results when I highlighted the stock as a buy, and a larger discount to its estimated fair value than at its most recent lows in October of 2023. And while this doesn't guarantee that the stock will bottom out here, the setup for Barrick is arguably the best it's been in years, with it trading near a trough multiple, with trough earnings, cash flow, and production after the tough year in 2023 with a couple of setbacks. Some investors might wonder why one would even consider buying Barrick here, given 3 consecutive years of rising costs and production below plan. However, I would argue that this is the primary reason for owning the stock. In fact, my favorite time to start new positions is when expectations are low. The hiccups are in the rearview mirror and sentiment is in the gutter. Today, this is precisely the setup we have with Barrick. With sentiment at its worst levels in years right on the eve of the significant increase in annual free cash flow, margins, and productions. And with higher free cash flow should come increased dividends and opportunist buybacks, in addition to improved unit costs starting in 2025. So for those willing to be contrarian, I would expect a 180-degree turn in sentiment over the next couple of years, which I expect to translate to much higher prices for the stock.
Sorry, which time?
Oh, Barrick.
Okay, when rates go up, people sell gold, and that means you should buy gold because we buy gold for insurance. Or I want you to buy some gold.
Based on my required 35% to 40% discount to fair value for margin of safety, Barrick is now firmly within a low-risk buy zone, with the midpoint of this buy zone coming in at $14.15. Meanwhile, the stock looks to have flushed out a considerable amount of weak hands.
Sometimes there's something that's so out of favor, so I think take the road less traveled. Miners are perennial underperformers. It was actually 45 years ago, January 19th, 1979. Gold miners are basically unchanged. You dig the deep hole, you dig around. Guys get trapped in the hole, sometimes a lot of bad stuff. But the point is, the spread right now with gold itself is pretty extreme. So we have gold making, and we think gold's going a lot higher, at least from our point of view. And so the situation, I think, is that not only the miners having lagged general equity market to a substantial extent, they've lagged the underlying metal. So at some point, you do get these sort of pops or catch-up trades. And I think that's what we're looking at as an opportunity here in 2024. GDX is the vehicle to use. Of course, that's the most liquid sort of mining ETFs, and there are several. This is an interesting chart, not because I made it, but it's because it tells a story, right? This is a ratio chart. It's gold miners divided by the market, SPY, to ETFs. And so what we know is that the relative performance is poor, but we keep holding this level for about almost 10 years. And I think that the word developmental is appropriate. This is curative healing. The arrow speaks for itself. Of course, that's a judgment, mine, but that's what I'm thinking.
With significant spike in volume this week. So with the technical setup improving and the valuation back to attractive levels, I would expect further weakness to buy more dips.
The gold stocks are still trading as if gold was $1,500 and not $2,000+ an ounce. So they're trading at 50% of their real value. So I look at 2024 as a catch-up year for like the vast majority of gold stocks. I think they're going to outperform any other equities in the market. I'm very bullish on both copper and gold for 2024. I think that with the closure of Cerro Cobre Panama in Panama, which is a real tragedy, the copper market is going to be very tight. In fact, it'll be in a deficit for 24, which will support prices well above $4 a pound, in my view. With any kind of activity, it'll be over $4.50.
For those of you who are wondering, the stocks I bought are TTWO stock to anticipate on Grand Theft Auto 6 release at 153 and Coinbase stock at 125. A dip buying right after a 20% correction when Bitcoin price fell on Sell the News Bitcoin ETF dip. I want to own these stocks for the reasons I talked about extensively in this video. It's just a starter position. I can't really add in too much at those prices because they are not at a margin of safety.